Hey, Karan here. Let's talk about what's happening in real estate. First, we have shocking real estate numbers that could signal a foreclosure crisis. And the answer to if now is the right time to be buying real estate. Now, this video is sponsored by my empty wallet. So go ahead and do me a favor. Give this video a like for me. It truly helps other people to see this video and helps the channel out tremendously. Let's get into it. Okay, let's look at some data. At a high level, here's what we know. Foreclosure filings are up 28% from February, which is a percentage increase of, get this, 181% from a year ago. We are now at our highest level of foreclosures since March of 2020, where we saw nearly 47,000 foreclosures being filed. If we zoom out a bit, we'd see that this is the 11th straight month with a year-over-year increase in foreclosure filings. If we look a little closer, here's how the numbers stack up. In March, a little over 20,000 properties started the foreclosure process. This marks an increase of 248% from last year, or about 1 in every 4,000 properties had a foreclosure filing. Now, you may be wondering, how many foreclosures were actually completed? Well, 4,406 foreclosures went to completion across the entire country, which is a whopping 67% increase from February and 180% increase from March of last year. Massive numbers. And the states with the highest foreclosure in March were the following: Illinois, New Jersey, South Carolina, Delaware, and Ohio. Now, pause here if you want to see individual numbers for those states. So homeowners, should you be worried about your home values decreasing? Now, for investors who are looking for a market crash to grab up properties for the cheap, should you be licking your chops right now? Well, let's pull up a chart and look at this together to see if we can find any answers. Okay, here we go. A nice chart that shows foreclosure data since 2005. The first thing we notice is how much foreclosures rose as we made our way to the foreclosure crisis in 2008 and 2009. The next thing you can see is a sharp decline in foreclosures after 2008 and 2009. But take a look at this. If we only listen to the foreclosure numbers of today, you'd think we'd be in a crisis. Right? Foreclosures are up 181% from a year ago. But even with massive year-over-year increases in foreclosures, we're still only about 57% of where we were in Q1 of 2020. Before the pandemic, we'd see about 80,000 to 90,000 of foreclosure filings quarterly. And currently, we're only sitting around 50,000, which is far from a crisis or a crash. Now, let's address the obvious, right? Yes, the data does show that we are trending upwards in foreclosures month after month. And the chart looks relatively the same for completed foreclosures. I don't gamble often, but I bet my money that we continue to see month over month and year over year increases in foreclosure filings as we continue to go throughout 2022. But what I don't expect is a housing crisis similar to 2008 or 2009. So what does this mean for people like me looking to buy real estate today? So the question, should you buy this year? Well, today, March 4th, the Fed did something that they haven't done since 2009. The Federal Reserve raised the fund rate by 0.5%. Which is double the normal rise. In an attempt to slow down inflation, this is seen as a very aggressive move by the Fed. And mortgage rates have already been indirectly impacted and have ticked up a lot higher. 30-year mortgage is now above 5% for April. In March, the average was about 4.37%. And this is pain that borrowers will feel immediately. Higher interest rates mean higher mortgages. And higher mortgage payments will either slow down or even completely eliminate people from the mortgage process. And higher mortgage payments will either slow down or price out some borrowers altogether. I have some friends who are loan originators, and they are already telling me that they're having to call people who were previously approved to tell them that their are either no longer approved or need to look for houses at a lower price point, which is actually what the Fed wants to slow down inflation and to slow down the sharp increase in home prices. Here's a general example of how this works. Say at 3% interest rates, you could borrow up to $240,000 for your home. At 5% interest rates, you can only borrow $205,900 for that home, which is nearly a 34% decrease in borrowing power. But does this all mean that we'll start seeing a shift in the housing market? Could we be moving into a buyer's market really soon? I'd say not yet. The demand for homes still exceeds the amount of homes available, which means the demand for foreclosures are even higher. And until we reach a point where supply outpaces demand, we are likely to see home prices continue to rise, and it's more unlikely that we'll see a crash until that happens, which isn't the best news for buyers right now. And if you're looking to buy real estate and have the funds to do so, I would buy right now. Yes, rates are rising, but guess what? Home prices are rising also. And not if, but when we see interest rates lower in the future, you have a couple of options. The biggest one being you can always refinance to a lower rate later on, and likely be able to pull out that cash via a cash out refinance or even a HELOC. So, do you think we'll be entering a housing market crash sometime soon? Do you think now is a good time to buy? Let me know your thoughts in the comments. And I've placed a few videos on the screen I think you should watch next. If you found this video helpful, do me a huge favor and hit that like button for me. It helps other people to find this video and helps our channel grow tremendously. And subscribe to the channel if you're looking for more videos that help you save on taxes and grow in real estate. I'm Karan from Life Accounting, and I'll see you in the next video.